To the Daily Squeeze, Brian Farr here. A tough one for you, boy. End of the day, red. You know what? It happens. I'm not immune to it. I know you're not immune to it. It all happens to all of us. It's just the nature of the beast. We try to do what we can to mitigate risk when we put on plays. Sometimes things just don't go right at all. So we'll take a dive into what happened today in just a second, but overall a little bit of a sloppy day again in the markets. We had rising rates again, the 10-year yields breaking above 4.3, hitting 4.4 briefly, and that does ignite renewed concerns about inflation and the pace of expected rate cuts, especially now since we are starting to see energy start to break out, and we know that energy in particular has a huge impact on inflation readings and the such. So it is going to be a pretty big important thing to pay attention to. We do have upcoming payroll data, including the ADP private payrolls and non-farm payrolls, that will be more in focus as we go on through the week. We still have Middle East tensions. Gold still reaching new all-time highs, so there's still some relative strength out there. And even as the dollar strengthened and the rate cuts expectations moderated a bit, the Fed Reserve speakers continue to suggest a preference of maintaining current policy rates. We know that they're going to be pretty patient when it comes to all these data readings and the such. So we're just going to continue to monitor what they have to say about these current readings that we've been getting and the future of how they feel and everything like that. So let's get into it. Today is April the 2nd. This is your Daily Squeeze. All right, let's get into the bigger picture here. Looking at the SPY, we can see that we had a pretty good gap down day, especially on the Dow component names, which really led to the substantial gap down, especially when it came to healthcare names and managed care, because in healthcare names, we saw that the CMS, which is the Center for Medicare and Medicaid Services, they said late on Monday that the payment rates will be largely identical to January proposal. The insurance industry had argued was way too low. Analysts predicted that the rates were going to be significantly higher than what they got, and this is actually taking a pretty big blow, especially to big names like Humana, and Mizuho came out and said this could be an 8% overall headwind for Humana as far as their EPS goes, and Humana definitely took a pretty big hit altogether. And we've seen already Humana has been quite beat up this year already, and this is just another blow to Humana in general. And Humana's not the only one. You had names like CVS taking a big hit today. You also had Cigna take a decent hit as well, but Cigna actually did recover today, so that's pretty good. Shares in UNH taking a big hit. So definitely take a brief look at some of your healthcare names, and healthcare stocks in general within the XLV have a heavier weighting within the Dow, so that's why we are seeing a big hit to the Dow, and the Dow Jones was so close to getting to that 40K mark, and it just wasn't meant to be. Yields, we also saw yields rise above the 4.3 mark, breaking up and hitting a 4.4, this is the highest reading that we've had all year long. So this is a pretty significant situation that we're looking at here. Energy names, like I discussed, it continues to break out here. You got names like ExxonMobil breaking out into new all-time highs, Phillips 66 breaking out into new all-time highs, COP trying getting there to a lifetime new high. So all these energy names and crude oil in general is just having a pretty decent move altogether. Nat Gas, Nat Gas hasn't quite gotten there yet. You got to be careful with Nat Gas, especially if you're playing futures. It is called the Widowmaker and all that kind of aspect. But in general, energy is starting to pack a little bit of a punch as tech names and some of these Dow components take a little bit of a breather, especially with the CMS news that we had late on Monday. So definitely something to pay attention to. But other than that, we also had Tesla delivery numbers. Tesla did gap down off of those. You can pull up the numbers yourself and see what they were. But yeah, definitely a little bit of a miss. You had a gap down, and if we bring up the moving averages here, to me, Tesla is still guilty until proven innocent. It's trading below the key moving averages here. Just not much excitement here. In fact, it was one of the worst performing stocks in Q1, which is surprising because you would think Boeing was having a tough year, but actually Tesla has outbeat them to be one of the worst performing names out there for Q1. So yeah, tough spot to be in there. For Tesla, Apple is holding where she needs to be right now at 168.58. If we start to lose this 168.50 area, we could see a move back down to about 165. This would be the low, close to their earnings from the prior quarter, not this past quarter that we had recently in February, but the quarter before that back in November. So something to keep an eye on. We know that iPhone sales continue to be struggling. We still need to have more insight about their new augmented reality headset that they've been putting out that costs about $3,500, give or take. So yeah, Apple still has some woes there, but there's still some relative strength names out there. Google, I'm still holding a swing position on Google. They are weekly, so I'm a little bit aggravated with it. I may continue to hold that, but I'm going to roll them out possibly because I still believe in this setup. It had an inside day today, nothing too crazy, but relative strength here almost filled its gap from the gap down this morning. All in all, a really pretty setup. I'm looking for a move up to 159. Will we get it this week? I'm not too sure at this point, but I do think in the near term we could see a pretty good move towards that 159 as long as this 152 level continues to hold as support. It was acting as a resistance. Today we saw it act as brand new support. So I'm looking to see if this will continue to hold and break up, especially if we have a good positive day tomorrow. But yeah, all in all, gap down, Q's getting a reversion to the daily mean, to the daily 21 EMA. We'll see if it's another dip buy opportunity. As you can see, every time we've pulled back to the daily 21, it has been a pretty decent area to buy. It's been a nice zone to dip buy, so we'll see if that continues to be the case. And you can see here with the SPY especially, very clean argument here to be made that every time that we do dip to the 21 EMA, that it is a buyable dip to move things higher. So we'll see if this broader weakness continues, but let's go ahead and get into the day trades. It wasn't a pretty day on my end by any means. Let's break this down into a 5-minute chart here. Let's see this red line here. Actually, let me clear this out. There we go. All right, this red line here is your daily VWAP, and then I had a yellow one on here. I'm not too sure what happened with it. I'll put it back on. Actually, here, let me do this. 1 second here. I'm just going to put a VWAP here for the weekly, and I want to change that to, let's change that to yellow like it was. All right, now we can see that the yellow line is your week to date volume weighted average. This first long red wine. Anyway, this first red line is your daily VWAP, and I put a new VWAP here on this high volume node here. If we zoom in on the 1 minute chart, well, it's a little skewed now, but this was the highest volume tick that we had for the day up to that point at about 3 o'clock. So I put a VWAP here, and as you can see, it acted as resistance, and then we popped off on it and moved a little bit higher. But as far as the day trades go, yeah, it just wasn't my cup of tea. I only took 2 trades today, 3 trades technically, just from managing everything. But SPY, yeah, I tried to go long here. This was about 10 o'clock or so, and it was just shook me out a little bit. We had this nice little push here, back above the daily VWAP. We had tick readings that were still noisy, that we weren't getting pops like plus 600 or anything. In fact, they were just coming above 0. So I definitely was early, and it, things looked like we were trying to shift back up. I was looking for a move back to high of day, but we eventually, got clapped, and I had to take that off once we broke new low of day. We also had this nice little hammer candle on the 5-minute that I was working with. We did get, that push, but we didn't get enough, and we immediately, fell back in. And this is that hammer candle at about 950, and then maybe I just got in a little bit too late. That's probably what the timing was. And then, I was like, well, we are having some pretty bad tick readings here. The moving average, definitely staying below 0. And what I did was I took a call credit spread, the 5205, 5210 call credit spread for about 85 cents, took in a credit for about 85 cents. And we're going to use this high of day, or 5205 as our stop loss, but as long as SPX traded below 5205, then we keep the entire premium. And the rest of the day, it was really a snooze fest. You can see how choppy it was. Even on the Qs, it was just very sideways, no movement, no new highs, no new lows, just very choppy. And it looked like it was gonna finally pay out, but we started to get some shifts here. If you can especially take notice that here's a low, here's a slightly higher low, here's another slightly higher low, and this is kind of what the day was. It was just a kind of a slow grind here, and we eventually did get this broader based higher low here, and then a little bit of a breakout above 5202 and above 5205. And once it got above 5205, I had to buy back the short call and ride the 5210s, and I was able to win a little bit back there once we got this small push to about 5208, and we just petered out, and eventually we just ran out of time. I did have to sell for a complete pretty good loss there on the 5210s. If I held on to the 5205s, I still would have lost full credit because the SPX did cash settle at about 5206. So all the credit spreads that I sold and got received credit, I would have lost that completely, and that would have been pretty bad. So definitely didn't want that to happen. Well, I wouldn't have lost the entire credit. I would have lost, looks like I would have lost probably about 50 cents. So, there was some damage there, and I tried to mitigate it. It was just in the awkward spot where, we could have popped off, but we just simply ran out of time, and my target on that would have been 5218 to retest the weekly VWAP there. So all in all, it was a very complex situation. We had to mitigate risk and try to get things back. But you know what? I'm not immune to having red days by any means. And, if you talk to any of our analysts here, we all have red days at some point or another. So, it's just the way of life. It's just the way of trading in general. So tomorrow's a new day. We'll get back at it, of course, get back in the saddle, and all is good in the world. But all right, that is today's Daily Squeeze Report. Hope you have a good one. Stay safe out there, especially if you're in the Indiana, Ohio vicinity. Got some storms rolling through, and then we're actually going to get some down here in the south during the overnight hours. So, stay safe, be good, and we will catch you guys in the next one. Take care. Bye.